Hello, I'm Jorian Murray, and welcome to Good Things Happen, the show that invites changemakers and enablers to share their inspiring stories of progress. Whilst change can be uncomfortable, unexpected, and at times disruptive, it's inevitable, and more often than not, change is for good. We'll be hearing from people from all walks of life who have been at the forefront of change, including their journeys to get there and their motivations. Because when people work together for a common cause, good things happen. Today on Good Things Happen, we're joining Citi's 11th annual Digital Money Symposium to be inspired by thought leaders from across the financial services ecosystem who'll be discussing the future of finance and money. We invited Alex Miller from Citi's Global Insights team to be our guest host. He's joined by Bin Ren, founder and CEO of SigTech, and Ronit Ghose, Citi's head of future finance, to discuss the emerging role of artificial intelligence in global banking and more.
Welcome, Ronit, Bin, to the latest episode of Good Things Happen. And we're here at the Digital Money Symposium here in London, discussing the future of finance. And we've just published a report, of course. But you've been writing about this topic for 6 years, back in 2018, AI in finance. What's changed since then, Ronit?
Sure. 2018, we wrote a report called ABC, and the A was for AI. And we were very excited, put it out, and then crickets. Nothing much happened. What's interesting is we've just published another big report now on Gen AI as well as AI. And in that 6-year period, a lot has actually happened. And if you disaggregate media attention from work being done in enterprise or big banks, there's quite a difference. In our report, we have a chart. And in that report, we show SEC filings, mainly in the US, but some other non-American filings as well. And those began to spike in 2018. So we wrote the report because
something was happening.
And there was a real step up on AI mentions in corporate filings by FIs and banks. Media commentary only really picked up in Q2 2023. So what's different this time around? Yes, there is obviously Gen AI, but Gen AI putting UI and AI together into the palm of our hands, but more importantly, senior decision makers on excos and boards and politicians, that's changed the debate. So people like our colleagues in the innovation centers and labs, they've been working on this for years. But this time around it's just taken it to a higher level inside the organizations, I think. And that's a reflection of and led to lots of media interest, and hence we're discussing it. I think we've had like 4 or 5 panels so far at our Digital Money Symposium. AI is featured in most of them, if not all of them.
Well, maybe let's take that as the launch pad. You published the big report, the Citi GPS, pretty much overnight. What are the big messages that you're trying to get out to, whether it's policymakers, corporates, consumers, citizens?
Sure. So we're looking at how do we use AI? And then if you think about it, you can go from the wow, like wow, AI is amazing, to how we're going to use it and avoid the ow.
You're really getting into the weeds of it.
And we do the how and the ow, not so much the wow. Because I think we've done the wow now for 18 months or so. The kind of hype cycle, the Gartner hype cycle, we've done the hypes. In the report, we say this is undoubtedly good, Gen AI and AI, for clients, particularly consumer and small business clients. And I'll come back to that later in the discussion. It's good for clients. It's good for us in our lives. It empowers us. The internet commoditized information. The information's out there, but we just don't have time to think about it. And when it comes to money in particular, unlike, say, leisure or holidays or entertainment, we don't want to spend time thinking about it. What AI does is commoditizes intelligence. And so it's going to give us a lot of more decision-making tools. And that's going to be great for us as users of finance in our lives. So I think users, consumers, the client benefits. What we say in the report is it's unclear if the companies, the shareholders of the incumbent banks benefit. And it's equally unclear if we as employees of banks benefit. I know it's a cliche to say on the one hand, on the other hand, and we delve into that in the report, say who's going to win, who's going to lose at an enterprise level, at an employee level. And there's one kind of stat I'd like to throw out there, which we Our colleagues in the services, our TTS division did this proprietary survey of about 100 FI clients, and it's amazing.
Financial institutions.
Financial institutions, thank you. Financial institutions, mainly banks and some non-banks. And it's amazing. 93% of them said, we're going to make more money. This is a good thing for us. And I was thinking, ooh, aggregate profit margins are going to improve. Not a lot. They said if you took the mean estimate, weighted, it was about 9% increase in profits. Translate that into billions of dollars. The bank sector globally is obviously huge. In our sort of time horizon, the survey was next 5 years. It implies a couple of $100 billion of extra profit. And I'm like, we're all going to make more money? It's one of those things like, all our children outperform, right? Yes. And it's a little bit of that. And what we're saying in the report is, whoa, some incumbents who'll be, cliche I know, but agile, fast follow, they'll win. The big techs, the fintechs, whatever you want to call them, the digitally native companies, they're going to win. Just like we've had this 20-year journey, 15-year journey of fintech. That was like in China, in Europe, in America, that was really about the mobile internet. And if the mobile internet was an operating platform, this is the next operating platform. There are going to be new companies. We don't know what they are. There may be existing big ones. They're going to win. Some of the banks are going to win. But a heck of a lot of existing players are going to lose market share, which is why I think that overall headline number of 93% and a couple of $100 billion
hides a lot beneath the surface.
I think there's a lot going on beneath the surface. And the same for us is, if we don't upskill, I think we've tried in our careers. It's up to people to discuss whether it's successful or not. But if we don't carry on upskilling and reskilling, and we stay as we are going to fall behind. We are going to fall behind because just like when I started my career many, many years ago as a financial analyst, my boss didn't use a spreadsheet. He's a scientific calculator, and the outputs he would hard code into the spreadsheet, and he didn't use a mobile phone. That was my first value-added job at Citi.
That's incredible. And it shows you how far financial markets have changed just in our careers.
Yeah. And so we've had this explosion of information. The value that hopefully we add is not compilation of data and basic communication. It's analysis and value-added analysis.
And insights.
Insights.
From that, yes.
And that's what, hopefully we'll be able to keep up with. But it's not a given.
No.
If we don't keep learning, keep educating ourselves, we will fall behind. And some of that's already happened to many of our peers.
Well, this is perhaps a great opportunity to bring Bin Ren, founder and CEO of SigTech, into the conversation, because obviously you're right at the forefront of what's happening in this revolution. Maybe you could just briefly explain to us what SigTech is and then how you see your offering able to enable what we're talking about here.
Thank you, Alex. So SigTech, we provide solutions to front office users in capital markets. And most recently, we do a lot of new products using Gen AI, and we really think it's fundamentally changes how people work. And there will be huge implications, both in terms of boosting the productivities and managing the costs. I think what happened is AI has been through last 40 years, been through ups and downs, different types of progress.
This is not new, is it?
It's been not new. People have been working so hard at it for decades. I think the last time we had a major breakthrough was deep learning. People realized suddenly, instead of focusing on handcrafting very narrow algorithms ourselves, just build generic deep neural network and just give it a lot of high quality data, it will actually end up outperforming. I think that was a huge surprise to the world.
Step forward, wasn't it?
Major step forward. That's 10 years ago. And then ever since then, we are in the era of deep learning until the last few years, generative AI, because they actually scaled the deep learning neural network by another factor of 1,000 or something. Suddenly we see this dramatic inflection point in performance.
I mean, that's incredible, that factor you mentioned, isn't it?
Yeah, I think this scaling, because it's exponential scaling, both in terms of the amount of capital and computing resources required to train it, but also the output, the performance intelligence. And because it's non-linear, so it's not like we improve a system, 10% a year or 50% a year. We see this gradual improving capabilities. Actually, a lot of the capabilities in large language models, they emerge suddenly once we hit a certain kind of threshold, right? So it's quite interesting.
Maybe you could sort of help illustrate this capability with some examples. Maybe what's working now, and also perhaps things you look to solve for down the line, which we can't quite yet.
Yeah. I think when GPT-4 came out, I think a year ago, and they had this very well-written technical paper on the capability of GPT-4, which is, by the way, is already like 1 year old. And they said they passed all sorts of like university and graduate school level exams.
So qualification.
They passed the New York bar exam, I think, which is pretty shocking. And for example, at SigTech today, we build autonomous AI agents and that can pass the Chartered Finance Analyst exam at 90 percentile performance.
CFA,
The famous CFA, which takes like 1,000 hours for a human to prepare.
It's been many years since I sat though, so it's been a couple of decades, so I don't think back to that one.
People normally spend, I think people spend like thousands of hours and takes about 8 hours to do exam. Our agent can do the whole exam in 30 minutes and then score at 90 percentile plus.
So there you've got the capability of a CFA license holder.
Yes.
And are you seeing applications of that you're looking to deploy in perhaps the world of research or investing?
I think for the foreseeable future, I think we need to balance the power of this tool with expertise from the humans. So I can see two major change in the way we work. One is human will be always in the loop, especially in front office. The humans are certified by the regulators. Ultimately you are responsible for the work. So because I don't see how regulators are going to regulate autonomously a functioning piece of software. So
and that's a key point, isn't it? Is who's responsible?
Human has to be in the loop. And I think in our industry for the foreseeable future, it's a bit like commercial pilots. Given how much automation in the planes we have seen in the last decade, but still need 2 human pilots sit there. They are ultimately responsible for the safety.
That's a great parallel.
Right.
Maybe Ronit, I could sort of ask you to pick up what Ben was talking about in terms of Gen AI and applications, and I guess in the conversations you're having with banks and fintechs, what you hear as being most exciting.
And just to pick up on the pilot analogy, it's a very important one. We need 2 pilots. Partly maybe it's human psychology that we're happy to be on self-driven trains and cars, right? Many public metro systems don't have drivers, but on a plane we need a driver. And society and regulators treat banks like planes, because if we crash, it's a big deal. And we can't have complete automation. At least for now, the policy and regulatory world requires there to be a human that they can
point to.
But it's accountability, is a better way to say it. And there will still be that need for, whether it's that final investment decision, portfolio manager, capital allocation decision inside a company, or a risk decision, there'll be a human. But 2 pilots. There used to be how many? 5, 6 people in the cabin? I don't know. Not the cabin, the cockpit. Maybe not 5 or 6, but there was more than 2 before, right? There'd be a couple of pilots, there'd be someone doing communications, and there'd be a lot of people. And that's what's going to happen in financial services, because there'll be some roles where we go from 4 or 5 pilots to 2, and then there'll be other roles where we didn't have those jobs.
And that kind of opens up that whole sort of Pandora's box around jobs, and there's obviously this sort of dystopian views around there will be no jobs left, and of course there's other sort of more Panglossian views. What's your sense been when you think about the way in which Gen AI and your company's capabilities will help enable activities to be done more efficiently or better? How do you think sort of the nature of jobs perhaps begin to change?
The super relevant question. I think if we look at if we continue the analogy, given how far the technology in aviation has come, what happened is we had more pilots, not fewer pilots.
In aggregate.
Because the
cost, less on a plane, but more planes.
That's right. We had, because the cost, it has gone down. The service become cheaper, more people use it, more volume. Therefore, actually, the demand for pilots have grown over the years. Not because of the automation. Actually, we have more pilots.
That's now just the introduction of ATMs back in the 60s and 70s.
That's right. I think the financial services is especially relevant to our industry because I would say a large percentage of our cost, the industry, is human capital.
Yes.
Right? So when a technology like generative AI can help boost the productivity, essentially creating more output at a lower cost, suddenly a lot of the businesses become scalable. A lot of the services we provide become scalable. So more people will be able to access it. There will be more liquidity, more volume. I think in aggregate, Gen AI is a huge opportunity to scale the industry.
So there's two great points you pick up there. I'd like to ask one to you, Ron. So when you think about that sort of nature of skills and the way employees in financial services and perhaps beyond need to think about Gen AI, any kind of key pointers that you would draw upon?
When it comes to skills from a finance and banking context, what we've already seen happen in our industry is this shift, like in other information-rich or data-rich industries, from compilation to analysis. So as a young analyst, when I started my career, a lot of my time was spent literally data input, having physical documents. So I was a bank analyst, so I'd get central bank documents, balance sheet of Bank of England or Riksbank or wherever, and typing in the loan numbers.
Literally data entry.
Literally data entry. There weren't direct feeds from Bloomberg or Reuters or DataStream. Literally data entry. And that would take up 80, 90% of my job as a... Now, move on 20 years, my junior analyst didn't do that, or 15 years from when I was doing that, because they could just click a few macros and it would feed directly from an external data source. They spend more of their time on analysis. And if you think about what Gen AI does, the internet commoditized information, Gen AI commoditizes intelligence, so we'll hopefully be able to do more creative, analytical tasks. Now, I know that sounds Panglossian, and this is your earlier point, Ben, you're referring to, I think it's called Jevons paradox, and I probably mispronounced it, but it won't be just that we'll be able to do it cheaper. For every unit of output, our unit of input is be cheaper. Our clients will have these tools. And sometimes our clients will have it before we do. So they're going to create actually demand themselves. So we'll be maybe sure for basic creative tasks, content tasks, whether it's coding or research or analysis, we'll be able to do 30 to 50% productivity boost if you believe the forecast from many leading consultants. But our clients might be asking us way more questions. Our regulators might be asking us way more questions. Our partners, counterparts. So yes, hopefully, without sounding Panglossian, we'll spend more time doing more interesting jobs. But I don't think the amount of jobs will change that much. In fact, if you look at financial services jobs in the US, where we have the best data over the last 20 years, the massive revolution we've had in technology, as a percentage of the economy, it's broadly stable. It's amazing. Now, commercial banks within finance has declined as non-bank financial services companies have grown. So there's been a mix shift at an institutional level, and then within the institution there's been a mix shift. But the overall, kind of like the amount of GDP or employment in money-related businesses is remarkably constant in the US, despite all the change we've seen.
It's incredible that, isn't it? And maybe when we talk about some of those innovations of late, one of the things people talk about, of course, is that mass personalization and the excitement there is around what sort of autonomous agents and Gen AI could bring to wealth managers, to banks, and again, beyond finance as well. How do you think about that, Bin, today in terms of where we are today and the capabilities and where you think people want to get to?
Yeah, I think the generative AI is, as a piece of software can be quite counterintuitive, because when we normally use a piece of software, we think it's deterministic, right? We think we click this button, it would do certain things. If it doesn't work, we know it's broken in some way. But the large language models is fundamentally stochastic. So if you type the same question twice, you may get different answers. But also, this is just the way it is. But this provides unprecedented way for a user to actually customize it. For example, you can make it behave like a persona. You can say, hey, behave like Steve Jobs for the next 10 questions. And then you can ask very personalized questions like, what's your biggest regret, Steve? And it will actually answer those questions pretty like to a very, in a very authentic sense. So when we provide these large language models to consumers or institutions, I think there's this, I personally divide, the style of those agents from the capabilities of those agents. So the capabilities is normally provided like by a company like Citi or by SigTech. So we focus on what this agent can do in a specific domain, what kind of data sets it has access to, what kind of tools it can use, and how it can use the tool in the right way. So those are capabilities. But once that's kind of done and wrapped up as a product, the consumer can instruct this particular agent to behave in a way that they want. They can say, hey, give me a response to my research problem in a way that I can just copy and paste it in my email to share with my colleagues, or write it in a more formal fashion because I want to use it in my research report. So there's infinite, almost huge amount of customization driven by the user experience. I think that challenges our existing principles for user interface. So I find it quite fascinating.
So one of the other applications that we hear about is in the world of cost and cost from a perspective of fraud. Do you see Gen AI applications coming through in terms of fraud detection, fraud identification, that side of things?
I think people have been, I think since 18 months ago, people have been thinking, oh my God, like a large language model will enable more deepfakes. So if anything, people are thinking like, if anything,
that's sitting at that dystopian end, just as we're all being asked to sort of use our voices as
that's right,
encryptions.
So if anything, people are using the large language models, probably they're trying to do more fraud.
Yes.
Right. So that's
the malactors.
Unfortunately, the negative side of the technology. On the other side, I think there are technology being developed to watermark and trace signs of AI-generated content, because they sometimes leave, actually most of the time, leave certain signatures, right? So there are actually applications already. If you copy and paste in like a thesis written by a university student, it can say what percentage probability that is written by a large language model. So your professor can say you have failed or you have not.
AI against AI. Yes.
AI against AI. I think that's inevitable. I think there will be, as the capability of the generative AI improves, there will be corresponding technologies developed to try to,
It's a kind of race between, as the cliche goes, good guys with AI with bad guys with AI, and we have that with all technologies. But the challenge for us now is we've all spent the last 20, 25 years in this digital world where we got used to voice on phone, video on phone, video on tablet, and we now respond to in a way that maybe our grandparents wouldn't.
Without thinking twice about it.
Yeah. And in the context of phishing or social engineering, we are seeing this already in enterprise, corporates, and personal lives. You get a call from your mother or your daughter or your son, Mom, I've been whatever, kidnapped, and then our human basic
emotional response kicks in.
Because the voice sounds very similar. Now, maybe our phones will have a AI detection tool which will tell us, but that moment we our kind of animal brain kicks in and we don't really stop and methodically, going back to the pilot, I guess we'll all need checklists. In a way, we were discussing this at a family event recently, saying we need a family code word.
Yes.
Because, we need it. And then, of course, we put it on WhatsApp. And we're like, oh my God, it's on WhatsApp. The family code word, I know. Quick, change another one. We need to get around the campfire and, share that code word in person. But today, the deepfake, we're, as humans, imperfectly imperfect. And when a machine tries to mimic us, they mimic the imperfections perfectly. And so they look at tonality, voice, duration, etc. And they're trying to work out, this is probably a machine. But of course, the machines will keep getting, that's why it's a race between the good guys with Gen AI and the bad guys.
Maybe that's a good point to kind of ask how our regulators are thinking about this. And of course, regulators are not a single uniform beast. They're different in Dubai, from Singapore, Hong Kong, US, and Europe. But do you find, Ronit, that regulators are around the world generally of a piece in terms of how they think about this, or are there kind of quite distinct regional differences, perhaps?
Well, there's a kind of, and without giving too much of a plug to our report, we have a whole chapter on the regulatory piece, chapter 4, if you're looking at the report. Regulators around the world have very, like with everything, we see this with all novel or emerging technologies, they have different views. There's no single consistent views. There's a bigger picture question as to do we regulate AI? Or do we regulate, we don't regulate electricity.
Yes, or
You know,
the
banks,
internet per se.
yeah, the bank's usage of electricity or internet, we regulate activities. So what is it we're doing, whether it's fraud or consumer protection? So there's that more big picture philosophical question. Is actually,
And there is an argument that says that as any regulated industry is used to risk, that in theory finance should be well placed to handle that.
but of course, in anything with money and finance, because we're a hyper-regulated industry like pharma and others, pace of change and adaptation will be slower than in some of the lighter regulated industries, which is why in our GPS report we say maybe some of the tech companies, the fintechs or whatever we want to call them, the non-bank financial companies, let's put it that way, they might actually be more willing for regulatory reasons or just organizational, cultural reasons to take those risks. Because a lot of big companies will say, let's get clarity and guidance.
Well, maybe, Ben, that's a nice one for you to sort of think about. Because obviously you operate around the world in different regulatory environments as well. How do you think about that challenge? And also the fact that perhaps some of the banks you're dealing with aren't always at the same place as you are.
I think in terms of regulation, I do agree from a philosophical point of view that they should be regulating maybe human-in-the-loop driven activities, right? When was the last time, is there an example, the last time they tried to regulate a specific technology? Can you think of any example?
Well, you could say blockchain. I mean, the whole debate in many countries around how to regulate blockchain, which is...
But they focused on, for example, what they could do in crypto. For example, you can't stake. It's a security. You know, they don't regulate. Say, how do you do hash keys and link the blocks together, or like you can only create one block every 60 minutes. You know, they don't go into the technical aspects of it.
And philosophically, I guess those can change over time. So
Yeah,
you don't
exactly.
want to pin yourself down as a regulator.
Otherwise, the regulator would be writing like a tech spec for the technology, which is bit.
Yeah, and that's actually interesting and important point, because when I've dealt with regulators, regulators historically, like bankers, like particularly senior bankers or senior financial regulators and bankers tended to be finance people or legal people or accounting people. They didn't tend to be tech people, and that's a challenge.
This is the same understanding in the room, yes.
Because some regulators, without naming any, have been more proactive at going out and hiring from the tech industry or the consulting world to bring in that talent in-house. Because the senior regulators, if they joined those like senior bankers 15, 20, 25 years ago, they didn't have that expertise. They were interested in that field. They'd have gone out and probably joined a tech company or started a tech startup. So how do you bring in that expertise is a challenge for the regulators, but also for all of us in the traditional financial institution world.
And I know, Ronit, after the crisis, you were talking about the way in which the relationship with fintechs changed for many banks. They understood they needed to bring them more into the sort of financial sandbox. Do you see the same happening here as we move into this new Gen AI age? And then I'd love to get your perspective on that, Ben, too, as well.
Yeah, absolutely. We have a lot of smart people internally working on Gen AI and AI.
From multiple backgrounds as well.
Multiple backgrounds, multiple geographies around the world. It's industry-wide because there's a way, it's sometimes hard. We're very good at companies like us scaling things or doing things at scale. But developing new products sometimes is easier to do in a slightly more loose, relaxed environment.
Particularly when you've got a lot of legacy infrastructure as well.
It's there's legacy technology. There's we say tech debt, right? There's also org debt and culture debt. There's all of that. It's not
all the
just
things that you bring to the table.
And
yes.
Legacy is another way of saying this thing works. It's business as usual. It works. The machine works, but that car needs to be upgraded, or we need to maybe move from the car to the railway, or the railway to the plane. It's hard to build it sometimes internally. So we are, like all big companies, investing as well.
And Ben, when you yourselves, you talk to a lot of different financial companies. Presumably some are more open-minded, some more receptive than others. How do you navigate that landscape?
We focus on the technology, and then we try to always show our customers, how much productivity they can gain out of it. We do work with them individually, actually, to put in the guardrails. I think this is one thing I want to kind of just talk a bit more, because it's quite interesting, because I think in terms of like change management, like the regulation on this topic, I think it used to be the case that the change management is designed around what we should do. We have almost like a long checklist that's like, if you want to do anything new, follow these guidelines, step 1 to step 38 or something. Check everybody, lots of different people, I need to check it off. It's built around what we have to do, what we should do. Whereas in Gen AI, what I realized is that maybe the whole process has to be inverted. Instead, it should be focused on what we shouldn't do, because the capability is so many.
Don't limit yourself.
Don't limit yourself. Instead, focus on the constraints. Set the constraint. Or set the constraints so that anything falls within the problem space can be easily solved. But focus on setting the constraints. And on this, ironically, in my opinion, that it's actually relatively easy to set constraints for generative AI, large language models, because you literally just take the entire documents. You can say, hey, here's the regulatory requirements that this, just give it and say, read it, follow the guideline as closely as you can. If you're not sure, ask for my permission. Actually,
the power of the prompt.
The power of the prompt. You can basically follow it, and if you're not sure, and ask me. So I find it quite interesting, because if you invert it and then actually make the whole thing actually work really well.
Interesting. So quite positive in that perspective.
Very ironic, yes.
Interesting. So as we sort of think about going forward the next 3-4 years, we're going to get a lot of headlines, we're going to get a lot of claims. What do you think, Ronit, we should be most focused on?
Yeah, I think you're going to see a lot of big companies use this technology, whether it's Gen AI and AI, and that distinction, nomenclature will just kind of converge at some point anyway, or collapse into each other. We're going to see a lot of incremental change or attempts of putting this technology, whether it's LLMs or others, into existing processes. Now that's not to be poo-pooed at. That's good, because we will, in many of our more automatable roles, we will create efficiency gains and savings. What's going to be really interesting is whether it's existing companies or new players who say, how do I create new processes around this technology? And we've seen this with lots of other general purpose technologies. So steam engine arrives, productivity doesn't take off until we re-engineer the production chain around.
It all has to fall into place.
Yeah, and the same with electricity, and so the same happened to with compute and computing. So how do we, will we do that, or will we watch others do it? In the fintech revolution so far, when it comes to money and tech, in the consumer space, it was led by non-bank players. In the institutional space, it was a mix, and that's the really interesting bit of the pie, not the faster horse. And we'll all probably be working on the faster horse. Like someone's going to come around and go, I've got this thing that looks like a, wagon without the horse in front, and you'll be like, what is that thing? And that's going to be the interesting point. And I don't know, that's going to be an existing big tech company, an existing, we had this UK CEO of a very big fintech, and she said, of course it's going to be, I hope it's going to be us, she said. Of course I'm going to say that, she said, but will it be? Will they become the incumbents?
And I guess that's the intrinsic uncertainty of being at the cutting edge of such a revolutionary technology. Well, look, Ronit, Bin, thank you very much for what was a fascinating discussion, and obviously watch this space, read the report.
You read the report.
Get in touch as you'd like.
The report.
Yes. Thank you very much, both.
Thank you, Alex.
Thank you.
Thanks to Bin Ren, Ronit Ghose, and our roving reporter Alex Miller for today's episode, which completes the 4th series of Good Things Happen. And what an absorbing series it's been. We've met some fascinating guests on a wide range of topics. We've discussed what's being done to help tackle global hunger with the World Food Programme, learned how doors are being opened to careers in finance to attract and enable people from more diverse backgrounds. We met extraordinary para-athlete Lauren Steadman, who will soon be competing for Olympic glory in Paris, explored new frontiers in artificial intelligence, got an insider's view of the new space age, explored the tech revolution in healthcare, and learned how Citi's wealth managers are preparing to meet the needs of the greatest wealth transfer in history. Thanks to all my guests for taking time to share their stories, and thanks to you for tuning in. It's time for us to take a break for summer in the Northern Hemisphere, but we'll be back later in the year for our 5th season. If you've enjoyed listening, please subscribe and follow Citi's social media. Until then, take care of yourselves and let's make good things happen.
Citigroup Incorporated, Citi and SigTech are not affiliated and are independent companies. The speakers' views are their own and may not necessarily reflect the views of Citi or any of its affiliates. Neither the information provided nor any opinion expressed constitutes a solicitation for the purchase or sale of any security. The expressions of opinion are not intended to be a forecast of future events or a guarantee of future results.